If your accounting firm keeps buying tools but peak season still feels the same, the problem is not adoption. The problem is architecture. More software records more work. A cognitive operating system helps your firm get work done with humans still in control. This matters first for accounting firms and tax practitioners because you live inside recurring deadlines, reviewer bottlenecks, client exceptions, and staffing limits. You do not need another isolated app. You need one system that can understand work, move work, and document every decision. Here's the contrarian point. A software stack is a collection of tools. A cognitive operating system is a coordinated layer that sits across the work and decides what happens next, what needs review, and what evidence gets logged. Most firms today are sitting at stage 2 or stage 3 of AI maturity. They have digitized tasks, maybe automated a few handoffs, maybe added AI in pockets, but they have not connected identity, workflow, audit trail, and decisioning into one operating model. That is why firms keep adding software but not capacity. Every new tool creates another login, another exception path, another review step, and another place where context gets lost. The stack gets bigger, the firm does not get lighter. So what does a cognitive operating system actually include? At Phineas First, we frame it as the cognitive cycle. 4 layers: foundation, infrastructure, automation, and workforce. If one layer is missing, the rest will underperform. Layer 1 is AI foundation. This is where the system understands your documents, ledgers, client records, prior work papers, and firm rules. Not as random files, but as usable operating context. Without foundation, AI guesses. With foundation, AI can reason inside the boundaries you set. For accounting firms, foundation means the system knows what a monthly close packet is, what supporting evidence belongs to a reconciliation, and what approval rules apply for a client. For tax practitioners, it means returns, notices, source documents, prior year logic, and reviewer preferences are available to the workflow. Context is not a nice-to-have, it is the substrate. Layer 2 is enabler infrastructure. This is the plumbing most firms underestimate: shared identity, permissions, client portal, event logging, audit trail, integration points. Without this layer, automation becomes fragile, and AI becomes impossible to trust at scale. This is where connected beats bundled. You do not need one giant suite that traps every workflow. You need one operating layer across accounting, tax, audit, and advisory, with shared identity and evidence, so the work can move cleanly between teams and every action stays visible. Layer 3 is workflow automation. This is where the system starts acting. It ingests documents, classifies exceptions, triggers requests, drafts work papers, routes approvals, and escalates only what needs human judgment. Automation is not a macro. It is coordinated execution across steps. Notice the difference. A normal app waits for a user. A cognitive operating system advances the workflow. It knows the next likely action, checks the rule set, packages the evidence, and hands the right item to the right reviewer at the right time. Layer 4 is workforce multiplier. This is not about replacing accountants. It's about letting one team handle more complexity with less manual coordination. AI handles repetitive steps and surfaces signals. Humans approve, decide, and own the outcome. When firms miss this layer, they mistake activity for leverage. They speed up a task, but they do not redesign the system of work. Real leverage happens when juniors spend less time collecting, seniors spend less time chasing, and partners spend more time deciding and advising. This is also why audit-grade design matters. Every AI decision should log the input, the output, the rule boundary, and the reviewer action. If the evidence cannot be exported downstream for audit or inspection, it is not ready for serious finance work. For auditors, this means sampling, reconciliation, and evidence collection can be automated without losing traceability. For corporate finance teams, it means reconciliations and reporting move faster because the system keeps context and approvals attached to the work. The same principle scales into enterprise finance. If you want a simple diagnostic, ask 4 questions. Does the system understand the work? Can it move the work? Can it prove what happened? Can it make the team better without removing human control? If the answer is no on any one of those, you do not have a cognitive operating system yet. The firms that win the next decade will not be the ones with the most apps. They will be the ones that build operating leverage across accounting, tax, audit, and advisory on one connected layer. That is how Stage 2 and Stage 3 firms move toward a true cognitive enterprise. So the one true future of accounting is not more software. It is a cognitive operating system built on foundation, infrastructure, automation, and workforce design. Not AI instead of accountants. AI that helps firms operate with more capacity, more control, and better evidence. If you are building an accounting or tax firm that wants capacity, not just more tools, subscribe and follow FinAce first. We are defining what audit-grade, human-in-the-loop AI should look like in real finance workflows and how firms move from disconnected stacks to a connected cognitive operating system.